from a backtesting perspective. And what I wanted to show today was this area here. So if we go to the left, we see a couple of options. All the way at the bottom is something called reports. So we'll click on that and it'll bring us to this tab here, which we also reviewed that day. But one step deeper brings us to this tab here and this day and time. We want to click on that and it brings us to this view here. And what we see here is a breakdown of days, months, and trade time. I'm going to go through these top 3 in this video, starting with day. And we can see right away that the best performing day is Tuesday, where over the course of 2 years of backtesting data, I took 35 trades with a 56% win rate. Sunday, of course, being the least performing day, which I think is a little bit of an anomaly since I wouldn't trade on Sundays. So if we scroll down, we'll just ignore that row for now and look at Monday through Friday. And you can see the numbers here. From a win rate perspective, we see something interesting, right? Monday is by far the lowest day of the week compared to Tuesday, Wednesday, and I would say Friday. Thursday is pretty low, but at least it's above 40%, whereas Monday is by far the least. And it additionally shows up in the net P&L, only 6%. Now, of course, any positive P&L metric is great, but compared to the other days where we're looking at double-digit P&L, it jumps out. And so one learning here is that Mondays could be tossed out as a trading day. Yes, I would lose out on 6% gains, but what could that do for my mental health in the sense of all the losses that surely came through here, making up this 38%, may have an effect on future trades, especially in the live markets. And so that's one option you can take here through the data. We can see that the trade counts are pretty consistent, meaning I'm not over indexing on any particular day. So that's a good thing to see. And you have other metrics here, but I really just like to look at these top 3 here to get a sense of what's going on. And so right away, that's one option. We could cut Mondays out of the equation and focus on these higher winning, higher P&L days. If we scroll down, we see the same metrics, but just in a color matrix here. So nothing to really anchor to. What we'll do is we'll switch over to months now, which gives us a better look at things. So again, you see largely positive months. We do have one negative here in June. So let's scroll down here to the table. Right away, if we kind of look at this chronologically, we can see that we have pretty healthy win rates across the board. June jumps out as a month that has a lower than average, I would say. 36% win rate is far below our average win rate of the mid 50s. And so that's another learning here. We took 11 trades in June and it was actually a negative P&L month. So looking back over 2 years of data again, cumulatively, we're looking at a negative result for June, which could suggest that maybe we take out June as a month of trading, or at least be very selective in the trades we take in the month of June. That's another learning here, along with the Monday insight we got earlier. Conversely, we're looking at very high win percentages over a fair amount of trades in February. And then finally, trade time. I think this is a really curious metric here that shows me what times of day are advantageous. I'll start here at the 8 a.m. session, and it goes all the way till, these are trades that I held past the open and into overnight. So I'd probably stop here at 3 p.m. We have 7 trades here that started at 3 p.m., but they were negative and the win rate was below 30%. So what my immediate takeaway here is that any trade taken after 3 p.m. Eastern likely should be avoided, because across the 9 trades here that I have sampled in that time window over 2 years, they resulted in a negative P&L. So already I'm now limiting my hours of trading as well, which is a more efficient way of going about things. If we look at the morning, it seems like 8 a.m. is probably a little too early. We see a big jump, not only in the number of setups available, but also the win percentage, which makes sense, right? So it makes sense to let the 8:30 a.m. news pass, let some of that volatility move through before you look for setups, which could start in that 9 o'clock hour. After that, we're looking at pretty good times. And surprisingly, around lunchtime is my biggest winning percentage, 81%, which is crazy, over 13 trades. And so that could be another learning there. And then it just kind of continues into the afternoon until we hit our threshold here at 3 p.m. So the learning here is that don't trade before 9 a.m. and don't trade after 3 p.m. So by identifying those windows in time, it really makes me more efficient. That's time I can do other things, focus on other responsibilities, what have you, because now I have the confidence of the data showing me that it's more profitable for me to be consistent in the times of day, months, and even day of the month that I trade. So the key lesson is simple. It's not just about how you trade. It's about when you trade it. I'm learning that refining your strategy isn't just about improving your entries. It's filtering for the right conditions, the right time, and the highest probability windows. Because even a profitable strategy can become inconsistent if you apply it at the wrong time. And what surprised me the most was how much performance improved just by removing low probability days and times of day. This has been a major shift in my trading journey. Instead of trying to trade more, I'm focused on trading smarter, and stacking small edges like this is what builds consistency over time. I'm not a guru. I'm just someone documenting my journey towards consistent profitability using market structure, liquidity, and price action analysis. If this breakdown helped you understand your data and your approach to trading in a different way, then subscribe. If you want to see a trade where I apply my approach and talk through my thinking, then click the video right here. Every trade teaches something different, and the next one might show you something you've never noticed in the chart before. I'll see you there.